Soaring inflation, rising interest rates, and a rocky stock market have left Americans less than optimistic about the state of the economy. To help us break it all down is Jazmin Carpenter this morning with Wedbush Securities joining us live. Thanks for being here. Good morning.
Good morning. Thank you for having me.
So the unfortunate thing is stocks are down more than 20% since the start of the year. How is this affecting people's 401ks, retirement plans? I think I know the answer, but how bad is it?
Typically, most retirement accounts, including 401ks, are invested in a mix of bonds and stocks, and we are witnessing steep declines in the values of these investments. Don't panic, though. This can lead you to make hasty financial decisions that may be regretted later. This really is a good time as any to continue to contribute as much as possible to your 401k or retirement accounts or get started. It's never too late, and it will be beneficial to you in the long run.
Is there an easy answer to what is the reason for the sell-off?
I wish there was an easy response, and it isn't one reason. There are several of them, and it's the usual suspects that we've been hearing about, the Fed being one of them, and the most recent, you have the Russia war in Ukraine, China's lockdown, gas, oil prices, and inflation.
And if the Fed continues to raise interest rates, will it get worse? I mean, they've gone up a couple percentage points, I think, in the past few months here.
Correct. Being an optimistic, I need to be realistic as well, and I can see the situation becoming a little more challenging before it gets better. If interest rates continue to rise, so will the cost of goods and services.
Yeah, it's just crazy. People still buying those homes, though. The market is just insane. Is there anything people can do to help their 401ks instead of just sitting and watching the numbers drop? I know you mentioned patience, but what if people want to do something?
Absolutely. That is a great question. And there are definitely things that we can do to begin, and a couple of them, because there are many. It's to reassess your risk-reward profile. Prune off risk, remain invested if possible, and review and update your budget and financial plan. I cannot stress the importance of having a financial plan in these times, and at any time, really.
Yeah, and this is long-term planning, right? So you really feel for the people who are maybe retiring soon, maybe in the next couple of months. If you got years to go, sit back and relax. Come tax season, interested here, what do investors need to know if they have had a gain, or in this case, really a loss in their own stock market portfolio value? Is this something that they should be aware of when filing taxes?
They do need to be aware, especially if they have these investments in a taxable account, such as an individual, a joint, or a trust. If it's in a 401k or an IRA, those are not reportable and they're not taxed. It's important to communicate with your financial advisor as well as your accountant if you have one.
Okay. We're all in it together, aren't we? Jazmin Carpenter with Wedbush Securities. We appreciate your time and your insight this morning. Thank you so much.
Thank you so much for having me.